All to talk about the quarter gone by for Yes Bank and more importantly, their fundraising plans and what is the way forward and exactly what kind of bids they've got. I have with me the man who's running the show there, Ravneet Gill. Ravneet, first let's understand the numbers. I'm sure you're not very happy with the numbers because what you communicated along with your Q4 and Q1 numbers was the following, that we are nearing the end of the NPA cycle. But NPAs have not stopped. In fact, NPAs have only ballooned. As per your disclosure for the quarter gone by, it is fresh NPA surged to about 6,000 crore.
So I think first and foremost, I agree that we are ourselves disappointed with the asset quality issues, which we definitely thought had stabilized. And but there's another way of looking at it as well, Nukunj. So if you see what has got added to the BB and below book, in terms of groups which are not already part of that, essentially it's just two, which is CNK and the CG Power one. Now, those were two corporates where the events that unfolded were very difficult to anticipate, and therefore you could not have budgeted. The second thing is that we did expect in quarter two to for at least two of the resolutions which are very high profile and which are in the public domain to have got done, and those were baked into our credit cost guidance, and I think that didn't happen. Thirdly, I think you would agree that if you look at the overall credit macros that are there around us, they continue to remain fairly sharp and fairly stressed. And if you see the three factors in conjunction, it would give you a sense in terms of why we have actually had an increase in NPAs. So that's number one. On the basis of that, we said, okay, fine. If you look at these three factors, then there was an error of judgment on our part in terms of giving our credit cost guidance, and we said that the credit cost guidance we were increasing by 125 basis points at the outside. But having said that, if I look at the concentrated exposures in our book, I would say that this pretty much ring fences all the legacy issues.
You still have exposure to real estate. You still have exposure to telecom. It is not that the economy has really come back and there is no V-shaped recovery. If at all, the economic growth is very anemic. So why are you so certain that we are nearing the pain? Because if the economy does not recover and the set sectors like telecom or real estate problems get added further, the downward trend could continue.
So on the one hand, I said that if I look at my concentrated exposures where things could have potentially gone or those now stand ring fenced, if we have still provided a credit cost guidance of additional 125 basis points, I think it comes from the fact that we do recognize that sectors like real estate could see some pain, although we don't see that at this point in time. The names in our real estate portfolio which look to be marginal credits, I think have already been ring fenced either as part of the BB and below book or actually have been provided for. So I would say that it's very difficult to paint the entire sector with one brush. Overall, I think we're just keeping a very close eye as far as the real estate portfolio is concerned. As far as telecoms is concerned, my sense is that post the Supreme Court judgment, obviously there has been a little bit of disquiet that has come into the sector. But we equally know that the government has appointed a group of secretaries to look into this. And my sense is that the government will take a very pragmatic, enlightened view here. And so it will be very difficult to jump to conclusions till a line has been drawn under that. And I do feel that the government will take a very pragmatic view on the matter.
Now, what set really cat amongst the pigeon was your communication on Thursday, where you informed the exchanges that you've got a $1.2 billion binding bid.
Yes.
We're curious to understand that what is this bid?
So we received this bid on Thursday, and which is a binding bid.
One single bid of $1.2 billion.
Of $1.2 billion, and it's a binding bid. So what we did was we took it to the lawyers to have a look at it, to vet it in terms of how robust it was from a legal standpoint. And while they confirmed that it was absolutely binding and legally left nothing to be desired, their view was that look, this could also constitute unpublished price sensitive information. And their guidance to us was that you should make this known to the exchanges. Having said that, I still wanted to be very cautious in the matter. And we discussed the matter with the regulator, who happened to concur with the view of the law firm. And after they concurred with the view of the law firm, we immediately went and disclosed this to the exchanges. So if there is any perception that the intention was to bring this before our quarter two earnings call, or to create some kind of shock and awe, I don't think that was the intention at all, Nikunj. We are a very responsible organization. But when the view came, which was quite aligned in terms of the law firm and the regulator, I think it was just incumbent upon us to be able to go and make those disclosures.
When did you receive the bid?
We received it on Thursday.
And Thursday itself you informed the exchanges?
Thursday morning we talked to the law firm, and then based on the feedback that we got from them, we then immediately went and told the...
and you consulted the regulator as well?
We consulted the regulator, and I was very clear that we would not go out and put this till the time that we had run this past the regulator.
For a bank which was struggling to raise growth capital about 2 quarters ago, in the conference call you've said that $1.2 billion is one bid.
Yes.
But there are a lot of other interested parties and PE investors and family officers who've shown interest in tranches to invest in Yes Bank.
Yes.
Why the interest is so sudden?
I don't think the interest is sudden. When we raised our QIP, we were very clear that our next capital raise has to be private equity. And the reason for having private equity was only one, frankly speaking, which was that, when private equity comes, does due diligence and then decides to invest, I think it also provides external validation that somebody's had a look at the books. It was important because I think the perception needed to get created in terms of, what could be lurking underneath the surface as far as the bank is concerned. Over a period of time, the PEs have had a look at our books, done a very detailed due diligence. That is number one. Number two, and I wish that the market would take note of that as well, that you can't keep driving looking at the rear view mirror, right? So the asset issues, we have been very transparent and proactively so. But what long-term investors also look for is that once you recapitalize the bank, then do you think that the engine still has the ability to generate massive revenues? And I think the common understanding that each one of them arrived at was that once the bank gets recapitalized, the revenue generating ability of the bank stood completely unimpaired. I mean, a very simple way of looking at it is that the exposure that we have, and for which we often are under scrutiny, we are not the sole lenders to these companies. There are other lenders as well. The difference really is that if I look at my capital buffers relative to the capital buffers that many of these banks have, mine are thinner. And my sense is that once we are able to recapitalize and push up our CET1 to levels which are in line with the industry standards, I think a lot of these concerns will dissipate. I don't think anybody questions the fact that it is a countrywide institution. It has great brand. It's a great brand, very dynamic set of individuals, great technological leadership, a very good product proposition, very good client connect. I think the only thing that needs to happen is the recapitalization. So I think, do remember that there are investors who are momentum players, there are investors who take trading positions, and there are investors who have a more long-term perspective. And for them, their investment decisions are also driven by what is their perspective in terms of the ability of the bank to really go out there and power its way.
What if you are not able to raise capital in the next 3 months? What happens then?
So I see that as a very remote possibility, and I'll tell you why that is the case. So when the bid came, first and foremost, there was all kind of speculation about the bid itself and who the potential bidder could be. Fact is that that has not been disclosed to anybody, so that remains speculation. Second is there was a question with regard to will this investor have the ability to be able to pony up the money. So they did bring a very strong letter of support from a large American financial institution, long-standing one, that they had the ability to be able to invest $1.2 billion. And then if you set that aside, whichever way you look at it, that what could be the regulatory implications, etc. of that, we have 2 more pools of investors right now. We have another pool comprising of 8 investors, 6 of which are international private equity firms, and 2 of which are domestic, very large domestic mutual funds, who between themselves have put in very strong bids of almost $1.5 billion.
Those are also binding bids or non-binding bids?
No, so in all these cases, the commercial due diligence is complete, but these are not binding bids yet. It could be pending, let's say, legal due diligence, etc., and obviously the regulatory approval that we may require. So that is another $1.5 billion. And then you have a third bucket of investors, which is basically 2 of India's most sophisticated financial investors, and then 2 family offices of people who have absolutely immaculate pedigree in terms of their entrepreneurship, in terms of the leadership, in terms of the governance standards. And just looking at that pool, we have $350 million of demand. So if you take the 3 buckets which I just talked about, we have over $3 billion of demand out there. Question really is for us to be able to very quickly now circle back and decide what could make the most sense for the bank from a financial standpoint, from a strategic standpoint, from a long-term point in terms of the rebranding the entire bank, repositioning it, And that's the decision that the capital raising committee of the board will need to quickly take and then take to the board for final approval.
In principle, you have a regulatory approval of about $1.3 billion.
That's right.
That's come from the regulator.
That's right.
Which means if you're looking at raising about $1.3 billion or $1.2 billion,
yes,
it can happen at a board level.
It can happen at the board level in the sense that it would still need shareholders' approval.
Okay. But you don't need to go to the regulator.
So till that amount, we won't need to go back to the regulator, unless of course we have a construct in terms of our investors where there is an investor who's at over 5%, which would obviously need regulatory approval.
If there is a single bid of $1.2 billion, that's going to be more than 10% of your current market cap.
Of course.
As per the regulation, individual cannot own more than 5%. So if you're looking at raising money from one source, then you need a lot of regulatory approvals.
So if you look at it from the context of the changes that happened from RBI's regulations around ownership of banks, those changed in 2017 and that provides a lot of flexibility. The second thing is that I don't think the bank really the regulator really needs to tweak its regulations around. It has a lot of flexibility to deal with exceptional situations where if you think that a bank could get recapitalized very quickly, but you need to provide some regulatory accommodation in terms of the shareholding. I think RBI has that ability. I would not even try to second guess how RBI would react to this particular situation. But the worry that you're ironclad in terms of just the 5% shareholding, I think that the market may be taking too conservative a view.
When the stock fell, and it was not once upon a time, till about 4 or 5 weeks ago, it came to sub 50, sub 40 when the promoter or the earlier promoter was exiting. Did you get panic calls? Did the regulators start monitoring you? Were you in touch with the regulator? How did you handle that decline?
Yeah, I think between 30th September and 1st of October, the stock fell something like 34 or 35%. And it's a fact that it did concern a lot of people. It was a very unusual thing. So this on the 1st of October this happened. On the 2nd was obviously a public holiday. On 3rd of October, even though we were in the silent period, we went out there and did an analyst call, which had nothing to do with our financials, but only to be able to explain the situation, that what exactly had happened. So first and foremost, as you rightly said, that there was a stock of the previous promoter, which got sold by the mutual funds. It was something that was unanticipated, but equally something which was completely extraneous to the bank. It had nothing to do with the operations of the bank. The second thing was, unfortunately, the entire aftermath of PMC was at its peak. And the third thing was that there were a couple of these e-commerce sales which were on, which had put a lot of pressure on the system of the backhauls of the telecom carriers. And as a result, net banking for not just Yes Bank but for a couple of other banks as well was down. So when depositors tried to or clients tried to use net banking and they found that it was not working, there was this whole concern about PMC, and then of course the share price which had fallen. Obviously, it did create a certain level of disquiet among our various stakeholders. And yes, we did get calls. But on the 3rd, when we came out and we explained that the fall in the share price was something which was completely away from anything to do with the operations of the bank, I think the markets recovered very quickly as well. I mean, if I remember correctly, on that day itself, I think the stock was up 33% odd. So yes, I think that little aberration and that sudden fall, I think did create a bit of I won't say panic, but it definitely did create a little bit of uncertainty in terms of what was happening.
Are you constantly in touch with the regulators?
So I think
are they monitoring the stock price fall? Are they monitoring the progress at the bank?
I think if you look at the banking regulator, they don't really look at the stock price. And I think what happens with the equity markets and the share price movement is of a lesser concern to them. I think for them, the single biggest concern will always be, as it should be, is the interest of the depositors. And they will always want to make sure that depositor interest is protected and remains at the top of everything else. So we keep a very close dialogue with the regulators, keep them posted at all points in times, as we did even in that particular situation. And I think we found the regulator to be exceedingly supportive. And always do bear in mind that today it's very easy to be critical of the banking system. But if through the Asian crisis, if through the financial crisis, Indian industry did not get impacted and the Indian economy continued to stay on steady footing, don't forget it's because of the banking system here, which stayed rock steady and all of that. And I think at that time people's view was that it was an over-regulated market. But today, I think a lot of regulators globally are actually taking their cues from Reserve Bank of India. So I think it's a very enlightened regulator, and I think has a very good grip on the banking system here.
Just one more follow-up question on fundraising. You raised your previous capital at 80 rupees plus, 83 to be
83,
precise.
that's right.
Are you looking at raising capital in the same range? Because when you've got non-binding bids, I'm sure they must have asked you for some price indications also.
Right. So I think the pricing guidelines as far as the market regulator is concerned are very clear, and first and foremost those will need to get respected. Talking about the QIP price, would we want those investors not to get diluted in terms of a lower raise? I think that would be the endeavor. But having said that, I think the primary focus of the bank, not just the bank but even our shareholders, is that we need to get the bank adequately recapitalized, and we need to get it recapitalized faster than sooner than later. And I think so that is going to be the driving force. Although we will try to make sure that the dilution, if at all, is minimal for existing shareholders.
Okay. Now we've discussed the concerns. Let's look at the good scenario. You're able to raise capital at a good price. At whatever price the capital comes in, what happens then?
So first and foremost, let me make a slightly broader point, Nikunj. I don't think there's another industry which is as interdependent and as interconnected as the financial services industry is. And so I think we must fundamentally, it should actually be genetically encoded in us to be very supportive of each other and to become an ecosystem of facilitators. Unfortunately, I think the way the whole narrative around the financial services system is, I think we've become the trust lines have broken down. There's no question about that, and I think there's too much finger pointing. So first and foremost, I think we keep saying that there is an impasse in the economy and things need to change. It's not just the government's job. I think we must learn to help ourselves, and one way to help ourselves is that we are aligned in our thinking, in our thought process. We cheer for each other, and we are supportive as a community. So I think that is number one. Number two, as I have often said, that are the exposures which draw so much attention. We are not the sole lenders. The difference is really our capital levels vis-a-vis that of some of our peer banks. As soon as that gets sorted out, I think the narrative around the bank will change. Third, which is very fundamental right now, is tell me one large economy in the world which is as underbanked as India is. Yeah. And in a situation where you have the NBFC sector somewhat beginning to reset itself, I think the growth opportunities for a well-capitalized private sector bank are absolutely enormous. And I think investors see that. So my sense is that once we get recapitalized, you will see the bank come back on the front foot very quickly.
So what potentially could be the new normal for Yes Bank? I'm assuming that you're able to raise capital before 31st of December.
Yes.
1 month more grace period to the timeline you are indicating. So what kind of growth automatically will come back?
So I think when we say timeline, what I had said was that in some of the communication yesterday, that the bid that we have is valid till 30th of November. We would want to obviously reconvene as a board and very quickly take a decision in terms of what serves the interests of the bank best, while being fair to all the investors who have put in bids. I think what could be the new normal for the bank? I think two things. One is the growth. Second is the kind of growth that we want. We want growth where the businesses become, like we have always said, more granular. I think the mix between wholesale and retail becomes much more robust. I think we can grow in the high teens to begin with.
So it's not going to be 30-35% what you did in your 2 years ago, 3 years ago. You're not aiming at that kind of growth.
No, I first and foremost, we are not aiming for that. And second, I think in an environment like this, it is also not recommended. Okay. So we want to have a lot more considered growth, be much more thoughtful about it. But more importantly, it's not just a question of growth in terms of assets. I think we also think we have a lot of opportunities on the back of digital to grow our liability franchise, especially the granular retail franchise. And I think that will be a very big focus area.
Okay. Just to wrap today's discussion, and we've just focused on the important aspects. First, the asset side and the liability side. Both the asset sides we've covered. The timeline, and I don't want to get this one wrong because this will be quoted. You got a non-binding bid, and the non-binding bid states till 30th of November.
That's right.
Which means the board in next 2 weeks or 3 weeks will definitely take a decision on fundraising.
Yes.
So what could be that time period in which you will firm up? Which way would you be going? Would you be going through the private equity way? Would you be going through a family office way? The pricing? Do you think everything will be settled at a board level in the month of November?
Well, absolutely. I mean, I think, we will want to do that ASAP, not even wait till the end of the month. I think it's not so much a question of whether, it is investor A, B, C, D. First and foremost, it could be a combination of all of them, right? I think, like I mentioned previously, that we would want to make sure that the bank gets recapitalized fully and quickly. And then it should serve certain strategic purposes as well, that this capital that comes in is truly transformational capital for the bank, not just growth capital, but transformational capital for the bank. And I think that's a decision which the board needs to make, and we will make that sooner than later.
When you took over as the CEO of Yes Bank, what were your thoughts about running this bank? And looking at the way how the NPA cycle has unraveled, what's happened to the stock price, have you got sleepless nights or you're used to it now?
No, I think, I think sleepless nights are very often a function also of excitement. It's not just a question of, a worry. Sometimes you're just so excited, going to bed thinking in terms of, what could be the possibilities, and which I see as endless once recapitalization happens. So if I've had sleepless nights, and I admit to having had a few, I think they've come more from excitement than anxiety.
Now you're speaking like a true banker, right?
Well, after 33 years, I hope I can.
Really appreciate your time, and good to see a smile back on your face. The last couple of quarters have been very tough for you, so I wish you all the best for coming quarters.
Thank you very much, Nico. I appreciate the support.